Good morning and welcome to GrainTV.
Good afternoon and welcome to GrainTV.
Good afternoon, welcome to GrainTV.
USDA.
Cody, what's your favorite number out of this morning's barrage of data?
Yeah, I'd say that the planting acreage in particular.
Good afternoon and welcome to GrainTV for September 23rd, 2011, the weekly wrap-up show. Well, Logan, leaves were not the only thing falling on this first day of fall. Prices continued to tumble across the board. Massive sell-off after the Fed came out yesterday and announced that their new Operation Twist was going into effect. And just to go over some of what was happening in the equities and some of the other markets that affect the grains as well, let's take a look at some of those prices and the weekly percent changes. As far as the Dow is concerned, it was actually the worst week they've had since October of 2008. Very bearish signal right now on the markets. A couple other things to note are the CRB index, which is an overall basket of commodity goods, was actually down about 8.5%. Gold was down 9%. Oil was down about 8.9%. But on a different note, the dollar index seemed to be a safe haven in the face of all these, and that was actually up about 2.5%, which goes against our commodity prices pretty strongly.
Absolutely.
So what should we be looking for going forward? Well, I'm looking for some fund rebalancing as well as some position evening after this massive sell-off. I'm looking for people to take some profits off the table. That's what's going on in the macroeconomic arena, but let's take a look at what's going on in the grain markets.
Absolutely. As you said, the dollar index did have a relatively strong week this week. That gave absolutely no support to the grain markets. We saw December corn sell down 53 cents on the week. November beans lost an entire $1 just over the last week. Chicago wheat was down 47 cents. Kansas City wheat was down 49 cents. And we saw a little bit of a rebound today in the wheat market. Corn continued to sell off. Beans continued to sell off. But overall, very bearish in the equities, and that kind of spilled over into the grains this week.
Yeah, we basically saw a massive sell-off. Corn actually hit a 2.5-month low. Soybeans actually hit their lowest point to date this year, and wheat actually hit a 2.5-month low as well. Despite that, a little bit of an uptick that we saw today.
Yeah.
I think somewhere I saw the Minneapolis Grain Exchange was actually up about 31 cents.
Yep.
But all across the board, the theme was funds sold a massive amount of contracts this week, and for corn in particular, they were down about 40,000 contracts were sold this week by funds.
Yeah, absolutely. A part of this sell-off would have to be a result of some of these funds activities, but part of it has to also be we are moving toward harvest. What are you kind of seeing in the outlook here for farmers as they move toward harvest?
Yeah, we are looking towards harvest. We know typically during that time of year, futures markets tend to head south a little bit. So I'm looking for a little bit more selling pressure. Eventually, we will find a point where end users are going to start buying, which I think will be about that 620 level or so. But as far as weather is concerned, the picture looks pretty good going forward for the next couple of weeks. This week coming up does look a little bit cool, a little bit wet, but it doesn't look like there's going to be significant rainfall in any of the areas. But we do see a small frost threat for the upper Midwest again, Minnesota, northern parts of Michigan, a little bit in North Dakota. But it looks like it's pretty minor at this point, and those beans already got damaged pretty bad last week, so it's not going to be a big concern there. As far as 2 weeks out, looks like it's going to be warmer than average, and it's going to be dry, so it should go off without a hitch to harvest this year. Let's step to a quick commercial break, and we'll come back with some basis information. Welcome back to the weekly wrap-up. Well, Logan, we've seen in years past, we've seen the typical basis level for corn has weakened going into harvest. But this year seems to be a little bit unique in that regards. Why don't you just tell us a little bit of what's going on in the new crop corn basis?
Yeah, absolutely. Last year at this time, during the month of September, we saw about 3 cents on average come off corn basis for new crop delivery. This year, taking a look at that, we actually saw a 3-cent increase. Right now where we're sitting at 35 cents below the December contract on average. And that's comparison to 2010 at the same time period. We were 57 cents under that December contract. So what does this mean to farmers? I guess it boils down to that with basis where it is right now, there's really not that much of an incentive to store grain coming out of the fields. And it may be a wise decision to look toward marketing some of that grain right off the combine.
Yeah, it certainly is for new crop corn. But soybeans is a little bit different story, and we've actually seen the trend being broken around the Gulf basis last couple of weeks, we've seen pretty weak basis levels there, partly due to, I believe, exports have been pretty weak for soybeans.
Yeah.
So I think this week is quite a bit of a turnaround. Why don't you just go over what's going on in the Gulf basis there?
Yeah, absolutely. Well, if you take a look at our map here, it was a turnaround for basis out of the Gulf. We saw actually some locations strengthen soybean basis by 12 cents over the last week. And, that could be partially a result of the huge sell-off that we've seen in the soybean complex recently. Just in the last week, we took $1 off the November contract, as we said before. So you could be seeing some merchandisers trying to give farmers an incentive to come in and to price grain at these low levels right now.
Yeah, it looks like they're trying to fill some of their future uses, or anticipating exports coming back to us here in the next few months.
Yeah, absolutely.
So it looks like they're trying to fill up their bins right now at a cheaper price and get it to those export markets at a little bit more expensive price so they can make a nice difference in the basis there.
Yeah, absolutely. I mean, that's kind of the situation that we're seeing down south. It's a little bit of a different story, though, out in the eastern Corn Belt and in the Central Plains. As you can see, a lot of these locations were down or unchanged to 5 cents lower just in the last week, and some of these locations were 5 cents or more. So you can see, there's a real dichotomy of markets right now we're dealing with. And so I guess, from a producer standpoint, it's important to really be aware of what's going on in your local area, but also have a little bit of awareness as to what's going on, upwards of 200 miles away from your farm location.
Yeah, it sounds like this year, more than any other year in the past, it seems like it's very important to get a good grasp on what your local basis levels are doing, what your cash prices are. And if you want any help with that, make sure you give us a call here at GeoGrain. We'll be able to help you out. We'll give you a free historical analysis. And we'll also set you up with a demo so you can take a look at some of these live quotes, see how spectacular these markets have been in the last few weeks.
Absolutely.
Even though they've been to the downside, they've been very entertaining to watch and actually participate in.
Yeah, definitely.
So if you give us a call at 877-GRAIN-07, we'll set you up with a demo. You can also follow us on Twitter, check us out on Facebook, or always visit us on our website at grainhedge.com. Thanks for joining us today, and have a good weekend.